Hello again. Second video in 2 days. This is a response to Paul's question about my win rate and stop losses. So I used this morning's trade to explain about stop losses. Stops, well, let's go about win rate. That's easy. Win rate is 90%, 9 out of 10. That's probably affected by going for the smaller trade. So obviously, if you're only going for 8 pips, you're going to have a higher win rate than if you're going for 100 pips. Saying that, if you look back on my videos and study them properly, you will notice that many of the trades that I take and take 8 pips out of tend to go 100 and 150 pips anyway. So it's up to you to devise your own method you're comfortable with. Now, I've mentioned before that I like to be out of my trades before the London Open. So, as such, I don't want to be caught in sideways motion at, say, 10 o'clock in the morning, as I have been in the past. And quite frankly, it's stress that you don't need. I've devised a method that suits my anxiety levels, stress levels, call it what you like, comfort levels, because I'm out of trade now. I've made my money for the day. If I choose to get into another trade later, having made some in-depth analysis of existing levels that I expect the the price to reverse, then that's fine. And you take the consequences. You might get taken out. You might lose the trade. You might have 3, 4, 5 winners in a day. But as long as I got my bread and butter at the start of the day, I'm happy. And my trading time is any time between 4 a.m. and 8 a.m. But to make life comfortable, 6 a.m. to 8 a.m. is perfectly acceptable. And as long as I'm out by the time the big boys, the big guns enter the markets and just cause mayhem. Because they can reverse the price, and to trade a reversal I have to wait for so many different boxes to be ticked that you end up wasting hours and hours of your life, which can run into days and weeks and months, as you know. So no need. So with a win rate of 9 out of 10 or thereabouts, it becomes a workable method. Stops and are dependent upon, stops and targets are dependent upon where we are in relation to these, what I call critical levels, like the big round number here, 128, was where I entered the break of, which means it's highly likely to go to the next 25 marker level, which is 12825. So if I've entered it just after 128, that gives me the bigger part of the 25 pip gap to actually set my target. So sometimes I might enter halfway up and get 5 or 6 pips. Sometimes I might enter just after and get 15 to 20 pips. In this instance, there was a bigger gap, so I went for it. So with regards to stop losses, I just put my stops behind a recent level broken, a significant level broken. Not necessarily the 128, because that's just an arbitrary number, but we can clearly see price has come up and hit this level and reacted to it. So as long as I'm safely behind that level, I'm happy. So in a long trade, I want to put my stop behind a resistance level. In a short trade, I want to put my stop behind a support level. So let's put resistance on here, and we can clearly see resistance, price backed off. Resistance, it hit resistance, price backed off. So as long as I'm below there, I'm happy. The other thing that affects the distance, the value of my stop, is the currency pair I'm trading. So if it's volatile, by that I mean something that will give you long spikes like we can see on here, then I want to give myself a healthier size stop. So stops tend to be between 15 pips as an arbitrary number. They can be, a resistance level may only be 10 pips away from entry, as in this case actually, but then I want to add the spread onto that, and I don't want to get taken out of a trade just for the sake of vanity, me saying to myself, well, it's safe behind there. No, just give yourself some space. It's a high high win rate. So just be sensible, and you've got to do your homework. You've got to you've got to trade this demo, until you don't make mistakes. You do it as if it's second nature, and then and only then risk real money with it. So if we can go talk about actual currency pairs: pound yen 25 pip stop, pound dollar 20 pip stop, depending upon resistance and support, as I've mentioned, and euro USD a 20 pip stop. But really and truthfully, if 15 pip stop gets hit, barring any sort of unexpected news events, then it's highly unlikely that that stop will be taken out. In a short trade, you look for previous support levels broken, so I can clearly see a couple of levels here without going too far to the left on the chart. Stick a level on there, and stick a level on the most recent one broken, which is it's gone behind the label now, but I think it was that one there. So and you can clearly see how price has come back and reacted to those two levels there. It's hit it, then finally broken it, come back and tested it and gone up. So if I was in a short from here, then I'd want to have my stop somewhere, based on what's going on here, I'd want to have my stop somewhere around here, which is behind the 25 level, and also well behind a recent support level that has been broken to the downside. So in a short trade, put your stop behind support. In a long trade, put your stop behind resistance. I hope that answers your questions, Paul. So I can go a month or so without having a losing trade. 9 out of 10 tends to be the average over a longer period, and you're going to make mistakes. You're going to get caught out by news articles, but that's what trading's about, and you'll have to learn by your own errors. Look back on these videos, look at all the information that's here. You'll notice that nothing ever changes. This morning's trade was just what I call a no-brainer trade. We can clearly see we're in a rising set of H1 candles here. H4 is showing green for 2 candles prior to 6 a.m. My rules dictate I cannot possibly consider trading short. I don't try and pick tops, I don't try and pick bottoms. I'm a trend trader. So clearly had an H1 alert there at about 4 o'clock this morning. M30 alert, similar time, but there is no way I could consider shorting. I just have to walk away from the trade because it would take so long for a short trade to set up that ticks all my boxes that it would just be not necessary. So, and what do I know about the pre-Frankfurt and pre-London time period is that price tends to grind. The reason being, there's nothing going on. Simple as that. So hopefully that's answered Paul's questions, and it's shown you the trade of the day taken as a result of this M5 alert. Stop there, take profit there. I actually took the profit manually. I went to make coffee, was going for a slightly larger 15 pip take profit because I had the room up into the 128.25 level. Beautiful trade opportunity this morning, and as you can see, the price is just cruising on up. It's gone up another 25 pips since my take profit. So as I said before, you're trading with the trend. You're trading high probability movements. I checked the chart, the calendar today. There's no dollar news, there's no pound news until 1:30 today. So it was just a question of find the right looking chart and trade it. Hope that helps. Have a good day.